the pivot line on Bitcoin right here. Guys, see this? And again, let's get over to this. I want to show you guys this. So
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Join Gareth Soloway as he unpacks the early crash of crypto markets, revealing how tariff fears sparked a wave of panic selling. Watch as he deciphers Bitcoin's reaction and uncovers key market trends you won't want to miss.
right here, this trend line, look at how price hit it yesterday, rejected. Hit it today, so far it's rejected. This is a major level to watch because, again, this is like being on one side of the mountain or the other. If you're on this side of the mountain, the water runs down and you favor that move down. If it's on this side, the water runs in this direction, right? Up into this level. But this is that pivot line that I continue to watch on Bitcoin to give me a sense of which angle has the higher probability of playing out. As of now, it's still favoring the downside. But again, a daily close above would then favor upside to 108 to 111,000. Gold today, good move on gold this morning, nearing the all-time high double top. We had a little kiss here and a pullback and now pushing back to the upside. Gold miners are doing really, really well today as well. Again, this level now will still be resistance at 27.90, but because it kissed a few days ago, it is no longer as heavy resistance. And remember, folks, I always try to explain this to you, and I know we have new people tuning in every single day, but basically a level works the same way as a door that's locked. So if you have a great major level at double top and you're coming up into it the first time, it's the same thing as ramming into that door, right? So the idea is you're ramming into that door. Most of us on the first hit of that door, you're not going to break it down. The idea is every time you ram it, it's going to weaken until eventually, if you keep ramming it, the door is going to break down. That's exactly how trend lines work, support and resistance. And so the idea is a trend line that's hit many, many times is going to be much, much weaker. And eventually you have to go on the assumption that it very likely could break. And that, again, is something we're looking at on gold. Now, listen, this is technically only the third hit. So this would be first hit, second hit, third hit. So it may not break here. It's still a decent level. But if it hits it and pulls back and then tries again, it very likely will break up. And that continues to go in the mode of expecting gold to do very, very well. All right. Let's take a look at silver today. Now, silver, you guys know, as of yesterday, I was looking more and more bullish on this chart. We talked about it in that bullish bias, and look at that move starting to percolate here and move up. Short-term resistance on silver is going to be right up here at around 32.25. That would be your first big test of price should it get into that level. All right, next up, let's look at oil real quick. And if we look at crude oil this morning, oil is slightly lower, getting closer and closer to second target right down here. And again, that's around that $71.35 level right there, $71.35. That'll be second target. At some point, oil's going to bounce here, right? Whether it hits this level or kisses this level, it's getting short-term oversold, just like going up, right? So just like going up here, it was short-term overbought. It favored a pullback. We got the pullback via the trade on SCO. And now it's getting to that level where you got to expect a bounce at some point. Whether it touches this line or bounces before, we'll see. But again, a bounce, but then I do think eventually it rolls over and goes even lower. Let's look at natural gas real quick here. Nat gas slightly lower. Remember, it finally broke down from this upsloping parallel right here. And again, it did so with a river theory, using river theory there to explain it. Moved down, it confirmed, small bounce, and still showing weakness today.
Despite Federal Reserve Chair Jerome Powell stating that banks can serve crypto customers, Fox Business journalist Eleanor Tirrett believes his comments sent a different message. Speaking at a recent FOMC meeting, Powell emphasized that banks are free to work with crypto clients as long as they fully understand the risks involved. However, some industry insiders see his words as a subtle warning rather than an endorsement. Tirrett cited a source from a major bank who interpreted Powell's remarks as an indirect discouragement. The source suggested that Powell's message implied banks could engage with crypto businesses, but should do so at their own risk. This perspective highlights the ongoing regulatory challenges that financial institutions face when dealing with digital assets, despite Powell's seemingly neutral stance. Powell's tone on cryptocurrency has shifted in recent months. Previously, he categorized Bitcoin as a speculative asset similar to gold and downplayed its potential to compete with the US dollar due to its volatility. While he confirmed that the Federal Reserve has no plans to ban Bitcoin, he clarified that the central bank is legally restricted from holding the asset under current regulations. Any change in this policy would require congressional action. Meanwhile, with inflation remaining above the Fed's 2% target, policymakers opted to maintain interest rates at their current levels. This decision provided a boost to the cryptocurrency market, with Bitcoin surging past $105,000. As market dynamics continue to evolve, financial institutions and crypto businesses remain in a complex regulatory landscape, navigating both opportunities and uncertainties in the digital asset space.
This is the QQQ pre-market, essentially the NASDAQ 100. Let's see what is going on here. You can see that basically we are net positive, right? So we closed yesterday right over here, and after hours, there was a whole bunch of chop. This morning at 4 in the morning, you had a nice push up, and then it's been sideways chop ever since. So again, looks to me like we are setting up for a positive move on the NASDAQ as well as the S&P 500. Now, part of this is basically the 10-year yield. In fact, I would argue that a majority of this, maybe not all, because generally earnings have been okay, but if we look at the daily 10-year yield, the 10-year yield is down. And what do we know about the markets, guys? Again, this is classic understanding of how rates impact the S&P and the NASDAQ. What we know is that when rates come down right now, the market tends to float up. The market wants cheap money as long as the U.S. economy is strong, right? So cheap money means free, at closer to free. The stock market, investors, we've been addicted to cheap money for a long, long time. Cheaper money means more money to borrow to go into the stock market, and that's the relationship right there, all right? So again, now we are seeing one thing to take note of, and I gave you guys this yesterday in the game plan. We have a very important trend line right here that we are now kissing. So what this could mean is, and this is going to be pivotal going into Friday and next week, does this line break, or do we get the technical support to trigger a bounce? If yields bounce, then you would have to assume inflation could be hotter than expected in the PCE data tomorrow. That's going to come out in the pre-market. And maybe that, again, then triggers a sell-off as higher rates generally would. All right, in addition, looking at the U.S. dollar real quick, the U.S. dollar's down ticking just a little bit. This is helping gold catch a bid this morning, which is nearing its all-time highs. We'll go over that chart in just a minute. But let's get into a lot of these earnings. Yesterday after the bell, Microsoft reporting earnings. This was the daily Microsoft chart going into earnings. This chart, to me, what does this show us? This is a flagpole and a flag, right? Sideways inside bar consolidation. So if you know your technical analysis, very simply, this is a sharp down move with a lot of sideways to slightly up chop. That should be bearish, right? Let's see what happened on earnings. And yes, earnings triggering a sell-off, and the stock right now on Microsoft trading at around 421 after closing at around 442 yesterday at the close. So again, this is about a 4% move down. It's not a huge move, but for Microsoft, this is a solid one there. And again, if we're looking at tradable levels, I'll show you guys my first and only level right here. Well, it's not the only level, but this is the first one I will be watching, 415.67. There's a gap fill right there. And if it breaks there, your next level is at 410.85. All right, so these are the two levels I will be monitoring during market hours in the Apex Live day trading room with members to potentially look to trade, all right? So keep that on your radar. Next up, what do we have? We have Tesla. Tesla, again, coming into earnings. Wasn't down to my target yet, but also a lot of just sideways chop. Tesla getting a bounce in the pre-market off of earnings. You can see initially it flushed yesterday after hours, then recovered. Now, this is an interesting one, guys, right? So check this out. So basically, they missed on earnings. Their numbers were not that great, but Elon Musk said they're going to start growing again in 2025. So far be it from me to say, hey, that if I was a CEO, I'd probably say the same things. Yeah, we're going to grow. We're going to do great in this year. Yeah, last year kind of stunk, but hey, it's going to be a great year coming up. either way, the markets believe it. That's really all that matters, right? That's really all that matters. And so again, here we have a trending up move on Tesla. In terms of a trading level, there's not much here because we're trading at 406 right now, 406 to 407. If we look at that on this chart, that's right here. It's not even that high, right? All you're doing is going back to where you were basically trading last Friday. And so again, for me to want to trade something, I want to look at a big move that is kind of outside of the norm. And really anything in this range here, right? Anything in this sideways chop, that's all within the norm. If we had flushed down to this 360 level, okay, that's outside of the norm into this technical level. If we had surged up maybe to double top at 439, 440, okay, you're at the high end. That's a short-term double top.
Bitcoin's price is climbing today as investors react to the Federal Reserve's decision to keep interest rates unchanged. With the Fed maintaining its benchmark rate at 4.25% to 4.5%, the market has found renewed confidence, interpreting the decision as a sign that financial conditions will remain stable for the foreseeable future. While Bitcoin initially dipped following the announcement, it quickly rebounded, reaching a high of $105,563 on January 30, driven by bullish sentiment and investor optimism. A major factor behind Bitcoin's surge is the wave of liquidations in the derivatives market. As short traders were forced to exit their positions, Bitcoin's price accelerated upward, reinforcing its strong momentum. Over the past 24 hours, approximately $43.37 million in short positions have been liquidated, significantly outweighing the $17.48 million in long liquidations. This cascading effect has strengthened Bitcoin's bullish trend, pushing it toward key resistance levels. Institutional demand for Bitcoin also continues to rise, with U.S. spot Bitcoin ETFs seeing consistent inflows. Over the past 10 days, these ETFs have accumulated $4.3 billion in new capital, reflecting growing investor confidence in Bitcoin as a long-term asset. With increasing interest from institutional investors, Bitcoin's current rally may just be the beginning of a larger upward movement in the coming weeks and months. From a technical standpoint, Bitcoin's price chart is showing a classic cup and handle pattern, a bullish indicator that suggests further gains could be ahead. If Bitcoin breaks above the key resistance level at $106,359, it could quickly test its all-time high of $109,000. Analysts suggest that surpassing this barrier could open the door for Bitcoin to reach new heights, potentially targeting $125,000 in the near future. As market enthusiasm builds, traders are closely watching for the next breakout that could push Bitcoin into a new price discovery phase. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.